Today's cardinal lesson, we're talking about Social Security. And specifically this time of year, it's the 1st of February, and the numbers are just posted on the Social Security system in your My Social Security account. So I just ran my own statement. They actually went up over the weekend. And so I printed it off, and it's a good time to just talk about all the subjects that we're talking about today, and we're going to use me as the example. Now, if you do not have a My Social Security account and you're getting ready for retirement, which I'm thinking you're probably doing if you're watching my series of videos, this is a must-do, okay? So I'm going to go over this quickly. You go to ssa.gov, and then you hit on the button that says either sign up or sign in. And if you don't have an account, it's going to be sign up. And once you click on that, it's going to have a sign up. It's going to do a bunch of identity verification. And don't do this in a hurry, because I have several people come back to me when they're doing this, when we're starting a financial plan, and they're trying to get the account open on the My Social Security so they can get this statement. And it kicks them out, and then they've got to call Social Security. And my goal for any of my listeners, anybody I'm doing a financial plan, is to never have to talk to Social Security. The best situation is if we can deal with them online. But for this one, if you mess this up, they're going to do identity verification, which they really run your credit report, and they ask you, did you own a 99 Buick, a 2012 Cadillac, or a BMW, they just give you a choice. And did you have a mortgage with XYZ Bank, ABC Bank? You need to get those things correct. And then I think they give you a second chance, but it's real obvious to me that people are doing this in a hurry. And when they do it in a hurry, they get kicked out, and then it's forever getting one. But you need to get you a My Social Security account. And then once it's open, make sure you keep your password and handy and your user ID. You need to open one of these for your spouse, or your spouse needs to do it. And if you're going to come to me for help and we're going to do a financial plan together, this is going to be one of the requirements, is I'm going to get this statement from you, one of many things that you're going to send in. So just important, if you get one thing out of this video, is get this account. And then if you already have an account, go ahead and print your Social Security statement, because they just added your 2021 earnings. I mean, they just plugged them in. And so these numbers that I'm going to go over here for me and my wife, they go up a little bit every year, because what they predicted last year, it's now more for a number of reasons. We're going to be going over that today. But I need this to do financial planning. You need it just to have an idea of what you can count on from Social Security. So the new statement is what they're putting out now. It's just 2 pages long. It's a little more condensed, a little easier to read. They got some of the garbage out of there. It's still a government document that you need a decoder like me to help you out with. But the numbers that you're looking for, and these are my numbers, is I'm 63.5 right now, which is, and they tell me on here that I can get $2,608 a month if I file for Social Security right now, okay, which I'm not going to do. Then they also tell me at my full retirement age, 66 and 8 months, which it's an odd month amount because we're under a phase-in, but for all purposes, I was born in 1958. That is my full retirement age, and the amount of my check is projected to be $3,360. And then I'm going to be one of these people, at least the plan now is to wait till I'm 70. And the amount that I can expect at 70 is $4,308 a month. So, I look at that, and most people that, before they meet me and we're talking about financial planning, I'm counseling with them about this, they'll immediately say, oh yeah, I've looked at my statement, I got my statement, and they'll quote one of these numbers and they'll say, that's when I'm going to take it. I already got a plan, okay? And that's fine, and I'm going to work with that. But what I do in financial planning is, could we look at some other options? Even though we're not going to do that, is there's a whole lot to look at. In fact, I have another video on YouTube that talks about 7 factors you need to take into consideration that are unique to you and your situation before you make that decision finally. So I'm not going to be going over those today, but off of the statement, these are the 3 numbers. Is the numbers if you took it right now, the number if you waited till your full retirement age, or if you waited till 70, that's the number. Now, for my spouse, she has her own record, but what happens is on her own record, because she pretty much has taken care of our children for the last 30 years, and she worked some out of college and some a little bit later, and her benefit is small enough that she's going to be way better off filing as the spouse of me. So, and her full retirement age is 66 and 10 months. So we still need her statement, or she still needs the Social Security account. I don't have it in here today, but if you're doing this on both of you, you don't want to say, oh, my wife's like that. We'll still run her record. I want to verify all of that. She's at 66 and 10 months because she's 1 year younger, is her full retirement age. And what she'll receive is my amount of $3,360. You divide that by 2, so she's going to get 50% of that, or $1,680 a month is her benefit while I'm still living. So, you know, if I pass away before she does, so instead of her benefit, she's going to get my benefit. Okay? Now, what this whole thing is about for people that haven't taken Social Security yet is you need a filing strategy. Okay? Now, the whole video has parts for those of you that are already taking your Social Security, so don't disconnect now, but it's just the crux of this video is developing a filing strategy at a point in the future that's going to be optimal for you and your situation. So now we're going to go over mine. Okay, so if you know, where I have a minimum of 66 and 8 months, meaning that I have to at least file at my full retirement age or after, mainly around my wife's amount. But if you just, my strategy is I'm going to get at 70, $4,308 a month right off of here. And my wife is not going to get half of that amount. She's going to get half of this amount, which is $1,680, or it's almost $6,000 a month, which is a pretty substantial Social Security check if we're both alive when I'm 70 and she's 69, and we're looking forward to a number of years of collecting Social Security, enjoying retirement. That's a pretty nice check by the month to get from the government back on the money that we've paid in. Now, the actual amount that we get in 6.5 years is going to be larger than this, really, for 2 reasons. First reason is the Social Security cost of living adjustments. For 2022, the people that are getting Social Security right now, they got a 5.9% inflation increase because of all this inflation that's going on. So that made my numbers that are here off increase, because even though I'm not getting Social Security now, that got baked into these numbers, and that's going to go on every year till I'm 70. Now, I hope we don't have inflation that high sustained for 6 years. I'm not wishing that, but if that did happen, this number is going to be much larger because of all the years of that. The second reason is I'm going to have 6 more years at the highest earnings potential. So if we want to get technical, these numbers are pretty good, but they're not as big as they could have been, because what Social Security does is they take your 35, or they take my 35 highest years of earnings, where I paid in the most Social Security, and then they base it to come up with these numbers. And I went through my system and I looked at it, and at 28 of my 35 years, I've made the maximum for Social Security. And then the other 7 years that are plugged in there are something short of that. Probably not a lot short of that, but they're short of that. So I have 6 more years where I'm going to earn at the maximum, and it's consequently that this number could be 7 or 8 grand a month by the time we're actually collecting it. But in any case, for planning purposes, we're going to use this number, and then we're going to put into the software for you and for me. We're going to estimate inflation and estimate all of those factors. But nonetheless, we got this as a baseline to work with. Now, what then becomes is we start looking at the retirement income plan. So we know we got this coming in, and then we got the rest of my other assets where I'm going to create an income once I retire. And I'm fortunate that I've saved a lot of wealth over the years, some in retirement accounts, some not in retirement accounts, some in life insurance cash values that are accessible. So I'm going to have a pot of resources available to me at 70 when I'm collecting this by the month. And for Social Security, the way they calculate the income taxes on Social Security is by your other income. So, and it says only a portion of Social Security is taxable, and it's taxable at either 0%, somewhere in between, or 85% of the income, or countable is a better word than taxable. So if we call this $72,000 a year, my preference is to count 0 of it toward my income tax bill, but I probably have to pay a little bit of tax, but 85% of that amount, that's only going to happen if I have a whole bunch of other income besides Social Security. And what I've done in my planning to date, and I continue to do over the next 6 years, is to do a lot of Roth conversions so that I have other assets that I can tap to supplement my income, and that I won't have to pay taxes on distributions from a Roth IRA, nor do I have to pay taxes on distributions from my cash value life insurance. So that's a backup pot of money that's available to supplement my income. And frankly, if I don't need any more than that in any given year, then I can just take nothing out of there and just let them keep growing tax-free. Now, in any case, your other income besides Social Security from a planning, we need to get that, as much of that as we can, in the tax-free so that you really can live a tax-free or a very low tax retirement. Because in the end, it really doesn't matter the number of the money you get. You just need to have enough money coming in every month to do what you want to do. And I'm thinking that $10,000 a month after taxes, because my taxes are going to be very low, would be a pretty nice allowance for retirement. And it's a little over $300 a day. That it's kind of hard to spend all that kind of money unless you're out buying boats, and we already have a second home, a third home, I don't know, taking $100,000 vacations or something. And most people in their 70s are not doing that kind of stuff. I mean, most people that I work with, I have a lot of clients that live just fine off of this. Now, what I want to get across to everybody is, if I've talked larger numbers and you're sitting here watching that and say, well, that guy's done real well, how does that apply to me? Well, listen, the work I do for people who are not perhaps as successful as they would have liked to have been, or they had a job that was still successful, they have a smaller Social Security check, they have smaller accounts than I was talking about. Look, that's what we're in business to do. Is I get the most satisfaction out of helping people. If you cut these numbers in half, and you cut this number in half, and then you still have other resources over here, this actually, making their income tax-free, is actually easier to do for those people. So this is all inclusive. And if you've got way more money than all of this, and you might be saying, well, I'm just going to have to pay a lot of tax on my Social Security. Well, not so quick. I mean, we can come up with a budget and get enough Roth conversions that we can defer taxes, postpone taxes, get into tax-free so that you're able to live off of lower tax or low tax money, and then just defer taxes on the rest of your estate to pass on to the next generation. So we cover the spectrum in financial planning, and it's probably the easiest to do a lot of the work on people that have less. I'm Hans Scheil, and I thank you for listening.